If you're trying to make money with trading Forex, you've come to the right place. Let me show you in the following video why this method of invest is the right choice for you. Hello, in this video I want to show you, what is Forex trading and what are the keys to trading correctly. Let's go. The vast majority have heard about the Forex market, but few people really know what Forex is. Forex trading is not easy, especially for those who want to learn to trade Forex quickly and have unrealistic expectations. It is very important to know that Forex trading is not a quick way to get wealth. We'll see now. What is Forex? What is Forex trading? How to trade Forex. How to invest in Forex. Tips for Forex trading. And more. What is the Forex market? The foreign exchange market, also known as Forex, is a global and decentralized market where currencies are traded. Each of these currencies has a conversion rate, called the exchange rate. For example, if the EUR/USD has an exchange rate of 1.10, it means that first euro equals $1.10. Forex is one of the most liquid markets, where the daily volume of transactions is $5 trillion a day. It is mainly used to facilitate operations and investments between countries. The Forex market is open 24 hours a day except the weekend, opening in Sydney on Monday mornings and closing in New York on Friday afternoons. Are you a beginner and want to know more about the Forex market? You are in the right place. What impact does it have the technology in the Forex market? 3 reasons Forex market boom was thanks to accelerated economic growth, technological advances, Internet. One of the greatest achievements of the digital era is the virtualization of money. If the printed money allowed to transfer credit between people through a simple ticket, information technology or the Internet made this process as simple as pressing a button or touching a screen. In the 90s, this technology was recognized as a great opportunity and companies were created that allowed access to the currency market and leveraged accounts. These companies became known as Forex brokers, and it is thanks to them that currently anyone who has only 10 euros in their pocket and an online platform can test their skills in the market. What is Forex trading? To answer this question we will break down and define the 2 terms. The term trading is the activity through which one product is exchanged for another. You can trade with a multitude of instruments, Forex, commodities, indices, stocks, cryptocurrencies, etc. The term Forex refers to the market in which some currencies are exchanged for others, as well as other types of financial instruments. Therefore, what is Forex trading? Forex trading is an activity, or even a profession, through which currency pairs are bought and sold to speculate on the rise or fall in the price of these pairs. This activity is open to anyone who has a computer and internet access. Forex trading is a type of daily and international trading. States, companies, even individuals, like you, operate in currency every day. This trading is done through computer networks between traders around the world. This is the main reason that the Forex market or currency market is the largest and most liquid market in the world, the most accessible and as a result also the one considered most dangerous. Best currencies to trade in Forex. Let's look at the most popular currencies that are available for traders. The US dollar, the euro, the pound sterling, the Japanese yen, the Swiss franc, which make up the group of major Forex currency pairs. Euro to US dollar, pound sterling to US dollar to Japanese yen, US dollar to Swiss franc. See how the US dollar is included in all pairs. Compound pairs of major currencies that do not include the US dollar are called cross pairs. Some examples are Euro to pound sterling to Japanese yen, Swiss franc to pound sterling. There are 3 other currencies that can be commonly found when trading in Forex. The New Zealand dollar, the Canadian dollar, the Australian dollar. If you join them with the US dollar, you will have a group known as minor pairs. New Zealand dollar to US dollar, Canadian dollar to US dollar, Australian dollar to US dollar. All other pairs, generally known as exotic, make up less than 10% of all Forex transactions. How Forex works. The general logic is simple. Everyone who begins to carry out the activity of trading has in mind the following question: how to make money in Forex. The trader or operator of this market buys something when he thinks it will increase in value, or sells it when he thinks it will decrease in value. For example, imagine that the euro today is worth 1.2345 euros. Once the market is analyzed, the trader thinks that this value will increase in the next 24 hours. Open a buy operation today and wait. The next day the euro is worth 1.2395 euros and the trader closes the order, ensuring a profit of 50 pips. How much money does this represent? It will depend on the volume of money that the trader has invested in that particular operation. The profit could be as much as 5,000 euros, as well as 50,000 euros. However, delving into the previous example, we see that things are a bit more complicated. Let's start from the beginning. Steps to Forex trading. How to do Forex trading. After comparing several brokers and their types of trading accounts, the trader opens a trading account and makes a deposit in it. Now, you have several financial instruments at your disposal to start doing Forex trading online. The next thing the trader must do before starting to operate is to trade on the instrument or market on which he wishes to operate. Acting in a hurry is not recommended, although it could be interesting for certain trading styles or market situations. But for this, the trader must have experience. The analysis is key and can cover as many aspects as the trader deems convenient, but the most basic would be: exact conditions to enter the market with an order, money management, estimated time of assumption of an operation, volatility forecast for the period in question, proximity of relevant economic facts, and, most importantly, the conditions to exit the operation. All this should be analyzed before any operation. Once again, analysis is the key to trading in the Forex. Analyzing things is good for both the trader's emotional aspect and the balance of his account. The ability to find, analyze, synthesize and apply the information is what provides success in Forex. Performing these actions is what makes the difference between success and failure in online trading. After all these analyses or preparations, the operation itself is carried out by a simple mouse click, using specially developed software, which is commonly known as a trading terminal or trading platform. Clicking is the least important part of the negotiation. The important thing is done before. Understand the context of the Forex market. To know how Forex trading works, you must first understand the operation of this market, and therefore, ask yourself the following questions. What do I know about the basic principles of price formation of each asset in the world? What is the underlying structure of the trading industry? What is the nature of international economic interactions? What are the fundamental principles and technical analysis of the market? What are the psychological peculiarities of being a trader? What really happens when a trader presses a button? Offer and demand. In economics, offer and demand is a model that explains the formation of prices in a free competition market. Merchandise prices are established at a point where the quantity demanded by the consumer is balanced with the quantity supplied by the producer. The constant change in supply and demand of currency pairs is what the Forex charts represent. The philosophy of the price balance is key to understanding how Forex trading works, since all economic events in the world are relevant to the market but only they influence the offer and demand of the asset. Draw a mind map of the industry before you get lost. When you think about how the Forex market works, imagine a never-changing ocean. There are many fish in that ocean, from large to small, depending on their purchasing power. There are also decisions about monetary policies and trading that cause big waves, unbalancing the prices of most assets. There are medium-sized fish, private investors, companies with coverage needs and private banks, and then there are small participants, financial brokers, smaller banks and low capitalization investors. Most of the market participants mentioned above have direct interbank access to Forex, which is the market where all the magic of currency exchange occurs. They can enter it simply because it is over a certain threshold of funds. This means that they can operate among themselves without having to go through intermediaries. The smaller participants, who are interpreted as the financial ocean plankton, try to survive long enough to grow more as a Forex retail trader, which, of course, includes you. The buying power of an occasional trader is generally so small compared to the big fish that a Forex broker or a bank needs to provide you with a leveraged trading account and market access through the trading servers. Understanding how the Forex market works, as well as one's position on the scale of things, will inspire the necessary caution when it comes to trading. Forex is the foreign exchange. Currencies, unlike other stock assets, are economic tools as well as economic indicators. Generally speaking, if countries were companies, currencies would be their stock. Policies and central banks are the biggest adjusters of the capital supply, which makes decisions about their monetary policies a primary factor in influencing Forex trading and how it works. The most obvious and simple example would be the interest rates established by the national bank of each country in the world. Like the US dollar, the euro, the pound sterling and the Japanese yen, they are the world's most traded currencies. The Federal Reserve, the European Central Bank, the Bank of England and the Bank of Japan are, respectively, the big fish of the ocean. Understanding how this can affect the economy will help you understand how the Forex market works. Attentive to interest rates. When interest rates rise, something that only national banks can do, it is more expensive for market participants to borrow that currency from the central bank. Momentarily, this causes a shortage in the supply of the currency and drives its upward price. What is good, right? Who does not want a solid national currency? Well, it's really not like that. In the short term, this means that there will be less capital to develop business relationships, less national income and, finally, a slower economic growth rate. However, it also slows inflation and the inevitable rise in debt, which in the long term is good. Alternatively, when interest rates are cut, all market participants can borrow more capital. Momentarily, a surplus is created in the capital supply and the price of the currency falls. In the short term, this means an expansion in companies, increased by national expenses and the growth of the economy. Does it sound really good? Well, again, not really. The more money borrowed, the more capital is owed. In the long term, the credit accumulated in the bank falls on everyone's heads as if a great storm created a financial crisis. This is called the economic macro cycle. This process is common in all capitalist economies. National banks are continually trying to balance scales by raising and lowering interest rates. It is what is called the microeconomic cycle. These economic cycles are similar to the cycles of climate change, slow, unstoppable and very dangerous for market participants who cannot see when they arrive. Well, for now it's all. In the following video I will reveal the great secret to operate correctly. We will talk about two aspects that professional Forex traders implement to have between 70 and 80% success in their operations. This is your holy grail. This is what makes the big difference between earning and losing money in trading. Subscribe to my channel and activate the bell right now for more videos.